If you think the KLCI is safe just because it has been quiet, you might be standing exactly where the next crash will hit hardest. Let me explain why 2026 could be a brutal year for Malaysian investors who are not paying attention. The KLCI has been trading in a narrow range, while regional markets like Singapore, Vietnam, and Indonesia keep pulling foreign money away from Bursa. That is not strength. That is a market quietly losing its bid. When liquidity leaves a small market, the drop is never gentle. Now layer on the ringgit. The MYR has been structurally weak against the US dollar for years, and every time global risk-off hits, foreign funds dump Malaysian equities first because the currency loss stacks on top of the price loss. If the Federal Reserve stays higher for longer in 2026, or if US recession fears spike, expect the ringgit to test new lows and the KLCI to follow it down. Then there is palm oil, which still quietly drives a huge slice of our blue-chip earnings. Sime Darby Plantation, IOI, KLK, Genting Plantations, these names move the index. CPO prices are sensitive to Indonesian export policy, Indian demand, soybean substitution, and El Niño swings. One bad quarter for palm oil, and the index heavyweights drag the whole market down with them. So what does a smart Malaysian retail investor actually do? First, stop assuming dividend yield protects you. A 6% yield means nothing when the stock drops 30%. Second, check your real exposure. If your portfolio is mostly banks, plantations, and utilities, you are basically long the old Malaysia. That worked for 20 years. It may not work for the next 2. Third, build a cash buffer in ringgit and a small hedge in something uncorrelated, whether that is physical gold, a XAU-USD position, or a globally diversified ETF. You are not trying to predict the crash, you are trying to survive it without panic selling at the bottom. And fourth, be honest about leverage. Margin accounts and share financing loans look cheap until the market gaps down on a Monday morning after bad news from Washington or Beijing. The investors who survived 1997, 2008, and 2020 were not the smartest. They were the ones with cash, patience, and no forced selling. If this video made you rethink your KLCI exposure, comment the word ringgit below, and I will know to make a follow-up on the exact defensive stocks I am watching for 2026.